The question lingering in everyone's mind is how and when will the Bitcoin bubble pop? And this video will explore the options on how I personally will see the Bitcoin bubble popping, not from a fundamental standpoint, but through a technical lens where the charts do the talking, derived from a theory known as the Elliott Wave Theory. But first of all, let's discuss where we are in the market situation right now at the current time of recording. Gathering just a few events and starting with the elephant in the room, Bitcoin is down 33% from its highs, ultimately giving us a sense of skepticism that we may be entering a new bear market, which is understandable. Meme coins have also seemed to vanish into thin air, and even Warren Buffett selling $75 billion worth of Apple stocks, converting it all into cash. There has also been a significant uptick in people buying military stocks, all against the backdrop of escalating geopolitical tensions, which is also a very interesting topic for a lot of people. Now, these are all signs that could be cause for concern without a doubt. But is it truly enough to cause a shift in the bullish narrative of this current cycle where we're finally ready to drop from the euphoria phase? One thing is for sure though, time and time again, no matter how solid Bitcoin's fundamentals may be, and no matter how much you love or hate Bitcoin, we have seen a major cycle correction after every bull run, as you can see in the history of Bitcoin's chart here. We all aim to strive to sell at the peaks, buy at the lows, and with each pullback, the search intensifies for the best theory on when Bitcoin will top out again, or bottom for that matter. With all of the negative news piling up, I still have yet to see a definitive top signal or theory for not only the current cycle, but the real reasoning for why a pullback has happened from each previous cycle. In fact, the reasons for a bull market to continue was far easier to understand instead of why a bear market has occurred in the past, especially with so much bad news that have occurred, as you can see from all of the major events plotted on this chart in the red. I'm here to tell you that it all boils down to common sense, and the timing of the markets is not what matters. Once again, let's take Warren Buffett, for example. The man who has been holding stocks since our great-grandmother was alive is also the same person who is very, very clear about cryptocurrencies that will quote-unquote come to a bad ending numerous times. Boy, oh boy, was he wrong. Just because he sold off all of his holdings, does that really signal a market top in the current state of the markets? We need to think like contrarians here, ladies and gentlemen. The bottom line is that no matter how many times, I don't care if you're Jimmy Buffett or Warren Buffett, comment down below if you got that joke, by the way. Michael Saylor, Elon Musk, or even your favorite influencer on social media claims that they're buying Bitcoin like there's no tomorrow, or even selling it off for that matter. Their ultimate goal is the same as everyone else's, to sell for a profit at their own will. They don't care about you or the markets. We're just a number to them. In the end, it's not the influencers who are right. It's ultimately the markets. So here's a good perspective. The fundamental law of the market is the customer is always right. So here's my perspective. No one's going to nail the exact market top, I think, and that is going to be the key point of this video, and it's likely that the drop will catch us all off guard again, just like it has in every cycle before. Now, one of the most effective ways to analyze the markets is, of course, through a balanced approach that combines both fundamental and technical analysis. First of all, it's clear that Bitcoin is here to stay, and the charts back that up, both technically and fundamentally, so we can put that discussion to rest, right? Over the past years of studying the markets, I've discovered a method that has consistently provided a solid framework for understanding market movements. It's called the Elliott Wave Theory. If you had asked me 5 or 6 years ago on how to read the markets, my answer would have been a lot less certain and a very different approach. But after diving deep into the market cycle theories, I've come to rely on using this theory the most, the Elliott Wave Theory. This has actually started to recently, over the past few years, gain quite a bit of traction due to its accuracy for understanding general market trends of the markets. Now, I know that some people see this theory as more of a self-fulfilling prophecy for those that are not new here, and that's okay. Everyone has their own approach to the market approach. However, I believe the skepticism towards the Elliott Wave Theory often comes from a lack of understanding. It's no one's fault. There's a lot of misinformation out there, and unfortunately, many books and videos don't do a great job of explaining the theory's core principles. And even those who do understand it can sometimes confuse more than they can actually clarify the theory, whether that's intentional or simply because they're not the best at teaching it. I don't know. Again, that's not their fault. The core principles of the theory are sound. Now, you may be asking, what the heck is the Elliott Wave Theory? Let me explain it to you as simple as I can. It's based on what is known as 5s and 3 waves. Take a look at this picture here. Imagine you are in a crowd at one of the biggest football events supporting your favorite team. We all know how crowd waves work, right? First, a few people stand up. This is the initial movement, and then more people join in, creating a bigger wave that moves throughout the entire stadium. Eventually, the wave also loses momentum, and fewer people stand up until it fades away. The Elliott Wave Theory, the markets move in arguably a similar pattern. The first wave, some investors start buying, causing the prices to rise. Second wave, the price pulls back a bit as some take profits. Third wave, a large group of investors jump in, pushing the price even higher. Fourth wave, the price dips slightly again. And then the fifth wave, the final push, is where the last group of people buy into the asset, followed by a larger correction known as the corrective lettered phase. This overall observation is the basis of the Elliott Wave Theory. The markets will always move in 5 waves and 3 waves. It's very simple from more of a superficial overlook. Just like the stadium wave has a predictable pattern, Elliott Wave Theory suggests the financial market moves in repetitive cycles of waves driven by market or investor psychology. So one of the key principles of the Elliott Wave Theory is that it offers a unique and comprehensive text. Arguably, no other method of market analysis I've encountered does that. It gives you a true understanding of what's happening within the markets, allowing you to see the bigger picture of your position within the market cycle. In this instance, we're focused on identifying where the market cycle top may be, this fifth wave here, so that we can maximize our not only our profitability, but making sure we protect and secure our current assets. So many people overlook this because they tend to view the markets from a linear perspective. As I mentioned earlier, the markets are always right, not Warren Buffett. There's a common misconception that the markets operate from a top-down perspective, where those at the top, like major influencers like Warren Buffett and institutions, have the most power. This is correct, but mostly incorrect. The Elliott Wave Theory actually clarifies that market power actually originates from the bottom up, beginning with us as the beginning of the trader and investor, ultimately shaping the markets from the ground level. That's why we have 5 waves to the upside. So if we take a look at the Bitcoin chart again, without going too much into the actual rules and guidelines of how the actual theory works, because it actually does have core fundamental rules that must be followed, I've done all the hard work for everyone, so we can more or less assume that everything is valid from a rule perspective. But the most important thing is that I personally believe, like I have mentioned earlier, is that I believe the market cycle top will come when we least expect it, just based in accordance to the Elliott Wave Theory that also combines the observations occurring within the current market situation. Why? Because from all of the current wave structures up to this point, I believe Bitcoin is currently in a wave 4 of the smaller degree, as you can see by the white. Now, this doesn't necessarily mean we're headed straight into a bear market, okay? Although the Elliott Wave Theory is excellent at highlighting the overall market trend, its strength is also its weakness. It always presents an alternative scenario. The key to this is to combine evidence from both fundamental and technical analysis to determine which scenario has the higher probability. I believe the markets right now are quite emotional now, that we have a pretty strong pullback that's looming in the background. The emotional factor is not enough for me at this stage to say that we're going to be going for a bear market outright, but the theory provides a possible alternative that we may have that situation to happen now. But if we do enter a bear market now, this scenario right here would suggest that the market has fully topped out. However, we need more evidence to confirm this transition, as there's still a risk for the market to move higher as well. With that being said, I don't anticipate Bitcoin reaching new extreme highs, as also some may predict, as shown in many of the bullish scenarios. Instead, I believe the market cycle will peak somewhere in the middle. Will this happen now? Will this happen later? I don't know. But like I've said, I believe the market cycle will peak somewhere in the middle where no one will expect it. It's going to happen when it's least expected, much like we did back in 2018 during the ICO phase, when everyone expected Bitcoin to surpass $20,000 and hit $100,000, which never happened. Now, here is why I think we will be somewhere along the middle. Again, in an area where most people won't expect it. currently there's strong evidence that one major count hasn't been exhausted yet on the medium time frames. Like I said, I believe we're in a wave 4 of the smaller degree. Until that wave 4 genuinely loses momentum, there's no reason to immediately turn bearish. Short-term fluctuations can happen, but the evidence suggests that we still may be in a wave 4. Now, I said I won't be going into the rules and guidelines of the Elliott Wave Theory, but very simply put, if you are in a wave 4 position, as long as it doesn't go into the territory of this wave 1, it's still valid. That means that we may still be in a bullish continuation to the upside. I believe, like I've said, the emotional aspect of what we're seeing with all of the evidence that I've mentioned about the possible bearish evidence mounting up, that is possibly why we're seeing so much scared people coming into this current situation right now, thinking that the bear market may happen right now. But for now, I believe it's just a correction. Now, I may be wrong, and I'm happy to be wrong, but the Elliott Wave Theory, it's not about being whether you're right or wrong. It's about whether you are able to validate the current structure of your own theory on whether the continuation is going to be happening or we may be going into a new bear market. So with that being said, with the current evidence and the narrative that we all originally anticipated that we're going to be originally hitting $100,000 plus, I still believe that is the current narrative, even with this current pullback of a 33%. That being said, I also think that we are looking for this fifth wave to hit that intermediate degree wave 1 in orange. So like I've said, around this area where people are eventually going to be talking about $500,000 once we get to these levels, and just similarly as people are talking about already $5,000 over here, is that we will be met somewhere along the middle where we will least expect it. Just like we did over here and just like we did back in 2018, there was no real reason on why the bear market was triggered. It was more of a collective sell-off than anything else. Can we get that now? Absolutely, it's possible. But again, there was no real reason. The actual reasons of the bear market, for example, the FTX that people talk about, the FTX situation where it got disbanded. We have also had that Luna crisis. Those are all what amplified the bear market, but it wasn't the cause of the bear market. So we are still in a very good position for a possible wave 4 to the upside to complete for a possible wave 5. Now, like I've said, I believe we're going to get that bear market pullback somewhere along the middle where a lot of people are going to be expecting $500,000 plus for Bitcoin. A lot of people are going to be losing their day jobs just to start talking about them to becoming day traders. That is when you will start seeing a shift in the narrative where everyone will start becoming extremely bullish. But for now, we are already seeing a lot of people talking about $5,000. Now, is that something that we should be talking about? We could, because that idea exists, but that is kind of an anomaly right now as we speak. I don't think there is a real reason to talk about $5,000 per Bitcoin just based on the cycles, but there's always a room for a first. However, just based on all of the ideas and the market maturity phase, I don't think that this is going to be the possibility based on fractal natures of the markets. Now, past price is not indicative of future price action, but again, we don't have enough evidence for a first as well. So similarly, just for having the idea of a fractal nature that the bull market may continue, we still don't have enough evidence that a first bear market of a regular cycle may occur to be happening. So this is why I believe that just based on these two ideas of having a possible flat idea where we're seeing a possible move to the downside one more time for a part 2 of a bear market, I don't think that's going to be happening. I think that we are still well within the narrative of a possible one more move up. And again, as I've said, I'm more of a neutral approach to this. I am in the middle where everyone is expecting, $500,000 plus Bitcoin, and opposed to where people are talking about $5,000 Bitcoin. I don't think any of those two will happen. Rather, I think we will see somewhere along the middle where people will least expect it, like we've seen for the past cycles, somewhere along the middle of the halving or some sort, or at least into a few quarters of where the Bitcoin halving has happened. So that is how I'm seeing the current cycles. Now, can we have something else that could be new? Absolutely. We could be working in a very wild swing where just similarly, where we come up into that same expectation of a target, we can also come back down and still get supported within well of these supported regions and then come back up again and then have a larger bear market cycle. But again, that's an entirely different topic and more an advanced topic for Elliott Wave enthusiasts. But like I've said, this is more of a general approach on how we should be looking at the markets. I think that we will be somewhere along the middle, not somewhere extreme at the top, not somewhere at the extreme bottom. So that is how I believe the Bitcoin bubble will pop based on fractal natures and a combination of other techniques that we can be looking for a possible wave 5 to the upside based on the Elliott Wave Theory. So hopefully that was helpful, ladies and gentlemen. I hope my analysis was a little bit more convincing for a lot of people. I believe the markets are a little bit emotional at this time. We should be approaching the markets with a more neutral perspective. Hopefully that was helpful. I'll see you guys in the next video. Thank you very much. Bye-bye.